The president demanded Walmart eat the tariffs and not pass higher prices on to customers, adding, quote, "I'll be watching."
It's a Pinocchio story, a fairy tale, the reality of actually having iPhone production in the U.S. And then if you actually produced iPhones in the U.S., you'd be looking at $3,500 iPhone.
That single sentence detonated across America's checkout lines like a pricing bomb. Because if the nation's biggest retailer can't dodge Washington's tariff crossfire, who can? Moments later, Apple, Ross, and a half dozen other household names flashed red as the White House floated a straight 50% levy on the EU and a fresh 25% hit on every imported smartphone. What began as political brinkmanship is now a full-blown retail tremor, and the ground beneath American consumers is cracking. Shelves once packed with choice are thinning, supply chains are seizing, and inflation-weary families are bracing for sticker shock they never voted for. Tonight, we expose how a single tariff salvo flipped Walmart's always low prices promise upside down, shoved Apple into an impossible corner, and pushed Ross to the brink. Because the meltdown isn't coming, it's already at the door. Walmart's boardroom lights were still on when that grim forecast hit the wires, and the math was brutal. With barely 2.8% net profit margin to shield it and roughly a third of its merchandise now slapped with 10 to 15% duties, the company faced a choice: raise prices or bleed red. CEO Doug McMillon chose survival, warning investors that everyday staples would climb because we are no longer able to absorb all the pressure. Overnight, the always low prices slogan turned into a promise Walmart could no longer keep. Behind the public statement, Bentonville launched its biggest logistics shakeup in 2 decades, ripping aluminum, steel, and tariff-heavy plastics out of next season orders, frantically courting suppliers in Vietnam and Mexico, and green-lighting emergency tests of alternative packaging to shave pennies off every SKU. The cost-cutting knife went deeper. 1,500 corporate jobs were axed last week in a restructuring blitz designed to speed decision-making. Corporate speak for slashing overhead before tariffs slice profits even thinner. Yet the danger isn't confined to headquarters. When Walmart loses control of price tags, dollar stores feel the shockwave. Rural towns see grocery options shrink, and suppliers that live on razor-thin margins risk bankruptcy. Truckers hauling fewer pallets out of Long Beach are already reporting idle hours. Shoppers sense it, too. The same University of Michigan sentiment survey that flashed 7.3% expected inflation shows confidence sliding to levels not seen since the early pandemic. One executive confided to Reuters that if tariff bills stay elevated through fall, Halloween costumes will cost Christmas-level money. Walmart is scrambling to keep shelves full and receipts flowing, but every detour in its supply chain is a neon sign that the old playbook, massive scale, rock-bottom cost, is cracking. And cracks, once visible, spread fast. Next up, the bargain empire that just ran out of bargain room, Ross stores. That fog of doubt rolled straight into Ross stores, and the bargain behemoth flinched. Within hours of Walmart's price hike warning, Ross did something Wall Street hates more than bad news. It withdrew its entire fiscal forecast. No sales targets, no earnings ranges, just a blunt confession that the tariff crossfire had shredded every spreadsheet the company trusted. Traders responded in kind, hammering the stock 11% lower in a single session and slicing nearly $2 billion off its market value before the closing bell. Behind those red candles lies a deeper hemorrhage. More than half of Ross's inventory originates in Chinese factories, and tariff-inflated freight costs have already pushed landed prices up by double digits. In a business that lives on 4 or 5% operating margins, those extra pennies are lethal. Buyers who once cherry-picked trendy closeouts are now clawing for anything that keeps shelves from going bare, while finance teams quietly map store rationalization scenarios, a corporate euphemism for shuttering locations before the rent comes due. The customer base is just as cornered. Shoppers who sprint to Ross for $8 tees and $40 sneakers can't stomach surprise markups. Every extra dollar siphons from rent or utilities. If Ross raises tags, loyalty evaporates. If it swallows the tariffs, profits vanish. Either route feeds the same rumor now buzzing through supplier calls. Bankruptcy isn't impossible anymore. And remember, Ross isn't a niche player. Strip mall landlords rely on its foot traffic, trucking firms depend on its weekly pallet orders, and apparel makers plan production around its seasonal buys. One misstep here, and dozens of adjacent businesses stumble. Next up, when the tariff spotlight swings from clearance racks to the world's most valuable gadget, Apple discovers what a $3,500 iPhone really looks like. The moment Trump dangled a 25% iPhone tariff, Apple's decades-old supply chain snapped into the political spotlight. Analysts ran the numbers. Shifting even 15 to 20% of iPhone assembly onto U.S. soil would cost $20 to $30 billion and take 4 to 5 years. Long enough for an entire product cycle to age out. Worse, Dan Ives warns the finished handset would land on store shelves at roughly $3,500, a price that would nuke Apple's famed aspirational magic and vaporize margins in one shot. Tim Cook's war room is now juggling 3 poison chalices. Absorb the tariff, a direct hit of up to $9 billion a year. Pass it on, risking 5 to 7% demand destruction as sticker shock collides with inflation fatigue. Negotiate a half-step pledge, perhaps promising new chip packaging lines in Arizona while praying that satisfies Washington. Inside Apple Park, procurement teams are already triaging components. Can camera modules shift to Mexico, antennas to Malaysia, casing to India? Every reroute adds weeks, costs dollars, and chips away at the seamless design-to-delivery rhythm that turned launch day cues into global rituals. Meanwhile, suppliers in Shenzhen and Chengdu, starved of orders, warn of 30% layoffs by summer. Proof that a tariff on Cupertino ricochets clear across the Pacific. Investors sense the bind. Apple stock slipped 4% on the headline, erasing tens of billions in value in a morning. More ominous are the whispers that Wall Street might start valuing Apple like a hardware maker instead of the untouchable ecosystem giant it has been for a decade. And if the world's most valuable company, with cash piles bigger than some nation's GDP, can't dodge the tariff bullet, what chance does the rest of retail have? Up next, far from Silicon Valley's glass spaceship, America's ports are turning quiet, and empty shelves could be the next ugly surprise. The warning lights aren't just blinking on Wall Street. They're flashing red in every major harbor. At Los Angeles and Long Beach, 17 of 80 scheduled sailings vanish from this month's roster. Executives now predict cargo volumes will tumble 20 to 30% before June even starts. For a tense 12-hour window in mid-May, not a single vessel left China bound for Southern California. An eerie silence the ports called unprecedented in a 24/7 world. Less traffic sounds like breathing room, but it's the opposite. Fewer ships mean thinner inventories, and every empty berth ripples all the way to the checkout lane. One trucking dispatcher in Carson told reporters idle rigs are stacking up like parked jets after a blizzard, bleeding driver paychecks by the hour. Swing east, and the picture only darkens. Savannah, normally America's 4th busiest container gateway, has a fresh backlog of 40 ships waiting offshore, reviving a bottleneck officials thought they'd killed months ago. Customs desks are overwhelmed, inspections crawl, and insiders warn average container turn times are now creeping toward double their spring norm. Retail planners who rely on Savannah for back-to-school and Halloween stock are already rewriting order books, betting whole product lines won't make it in time. Added up, West Coast cancellations, East Coast pileups, and a tariff climate that shifts faster than shipping lines can rejig routes. Logistics pros call delays death in retail time, because a late shipment is a lost sale, and a lost sale at thin margins can shutter a store. If the ports are the nation's arteries, America just felt its first chest pain. Next, we stack every blocked vessel, every price spike, and every nervous shopper into the same equation, and the economy starts wobbling like a line of dominoes. The cracks we've tracked, from Walmart's price hikes to Apple's relocation panic, now converge into one wobbling Jenga tower the entire economy leans on. The first piece falls in state capitals, a coalition of 12 states. led by New York, Oregon, and Illinois, just sued to strike down Trump's Liberation Day tariffs, warning they've already chilled business investment and could erase $180 billion in consumer activity over the next year. If courts freeze the levies, retailers scramble to reprice thousands of SKUs overnight. If they don't, every import-heavy chain faces a cost bomb on July 9th when the delayed 50% EU tariff finally detonates. Either outcome spreads chaos faster than companies can rewrite shelf tags. The second piece is the small store ecosystem. Independent toy distributors in Ohio, furniture importers in Florida, and boutique apparel shops nationwide all depend on the bulk freight Walmart and Ross anchor. When those giants pull orders, containers disappear, freight rates spike, and the little guys get priced off the boat entirely. Many are already rationing purchase orders, betting Christmas inventory simply won't arrive on time. Yet every collapse creates a corner of opportunity, and that's the third piece: countercyclical winners. AutoZone, long a sleeper stock, suddenly looks golden. Analysts note only 1/3 of its parts come from China, and when new car prices balloon under auto parts tariffs, Americans keep their old rides running, sending foot traffic and ticket sizes higher for do-it-yourself repairs. Investors now tout AutoZone as a safe stock that thrives no matter what happens with tariffs. But a few bright spots can offset a darkening horizon. Logistics firms warn the West Coast shipping pause alone could trim 0.3% off Q3 GDP. Port CEOs openly speak of furloughs for longshoremen if July's sailing schedule stays thin. Retail payrolls, already fragile after Walmart's 1,500 corporate cuts, may shed tens of thousands more if foot traffic slides with every fresh price bump. Put simply, tariffs raise costs, prices jump, shoppers flinch, orders shrink, ports slow, layoffs rise, confidence plunges, each link yanking the next until the entire retail chain rattles. One senior economist compared it to trying to fix a squeaky door by burning down the house. Washington insists short-term pain leads to long-term manufacturing gain. But for millions of households staring at steeper grocery bills, pricier iPhones, and half-stocked aisles, the pain is present tense. And if the dominoes keep falling, the gain may never arrive. Up next, our final checkout. Can America's retail backbone withstand the tariff tremor, or are we one price hike away from checkmate? The warning lights we trace tonight: Walmart's shrinking margins, Ross's disappearing forecast, Apple's impossible ultimatum, and the silent ports aren't isolated glitches. They're signals of a system under strain. Tariffs that promised to bring factories home instead hike prices, shrank choices, and rattle confidence. Every extra penny at the register feeds fresh layoffs, lighter cargo holds, and another shuttered storefront down the road. Yet history isn't written in advance. Policy can pivot, retailers can innovate, and consumers can choose where to spend or save. The question is whether we course correct before the price tag on everyday life climbs beyond reach, and before the dominoes we saw teeter tonight finally topple. So, what would you sacrifice to protect Made in America? A few dollars more at checkout, or the convenience and competition you've come to expect? Tell us below. If this deep dive sharpened your view, hit like, tap subscribe, and ring that bell. And drop a comment. Where do you draw the line between patriotism and your pocketbook?